So now we'll move on to the next leg of the program. We have a very interesting panel on financial inclusion and shared value. The session is going to get chaired by Raghuveer Srinivasan, who's the editor with Hindu Business Line. In fact, I have to give him a special round of thanks as well, because Hindu is actually helping us coming out with a compendium of enterprises who are actually making a difference to the world. So it is a list of 21 enterprises which get released in the next 2 weeks, and it is about enterprises who are doing good. So they're deeply associated with the effort. Thanks a lot, Raghu. So we'll actually have other set of people. Can I ask Nainalal Kidwai from HSBC to join us on the stage, please?
Social problem, social issue, and also making money out of it. This is a perfect definition of shared value concept to my mind. And we've had in the last 1 year an explosion in financial inclusion accounts under the Prime Minister's Jan Dhan Yojana, which today has about 200 million accounts have been opened and about 26,000 crores of rupees in the bank accounts. Of course, there are a lot of critics who say that a lot of these accounts, about half these accounts are not active and other stuff. But the fact is that it required an initiative from the prime ministerial level to push financial inclusion in this country. And we have today this happy situation where we are moving towards direct cash transfers for subsidies, food subsidy, even through these bank accounts. These are defining changes in the last 1 year in financial inclusion. But I'll not dwell too much on that. We have a power-packed panel today. I'll go straight to Rahul Gangal from Roland Berger. He's done a lot of work on financial inclusion and financial literacy. He was making the interesting point that it's not enough if you open a bank account or if you get the excluded into the system. You also need to teach them what financial inclusion is, how to use a bank account. In other words, financial literacy. I would ask Rahul to...
Yep, thanks a ton. I think one aspect of the Jan Dhan Yojana which is not talked about enough is that with the Prime Minister putting the weight behind financial inclusion, you had possibly the single largest spokesperson in the country who was talking about this idea from the ramparts of the Red Fort and hence rolling it down. So there was a lot of advocacy which was there, which helped financial inclusion go through. Second part, I think it's also a coerced model, and we'll come to it slowly. It was rolled down. It was not willfully accepted and imbibed on its own. It was an aspect that was pushed down into India. There are, so what's the objective of this entire exercise? The objective is, one, improve credit delivery, improve ability to understand what financial access people have. And the second is to be able to do that at a manageable cost. We may also want to touch those aspects as we move forward. We're looking at financial inclusion and financial literacy from those perspectives. From an aspect of access, the kind of people who have access to it, rural, urban poor. India is a young country. Almost 25–30% people are below the age of 15. Are you including them in the financial pool? Are you educating them enough about the access that they have? So access is not only limited to people with low income, but also people with reasonable income, but not enough education about what they have to do. And most importantly, are you covering all aspects of it? Are you covering individuals, corporates, households, units, entrepreneurs at one level? Are you covering geographically all elements of the space? Are you covering vertically by including what was traditionally a very nice form of chit funds, but is not used well enough by banks? Are you building all those tools into your system to ensure that literacy about financial inclusion is passed through?
Ms. Chetna Sinha is somebody who has practiced financial microfinance and microfinancial inclusion. What is your experience in this environment in India over the last few years to start off a microfinance institution, build it into a formidable bank today?
First of all, I would like to say it's not, this Mandeshi Mahila Bank is not a microfinance institution. We started, I'll just share a story how we started, which I really like to. So a woman named Kantabai, she came to, in my village, she came that I want to open a saving account and banks are not opening the account. Banks were there. And I just asked her, you are not asking loan. You want to open a saving account. You are putting your money. Why banks are not opening? I went with her. Bank said that she doesn't have ID. She's doing business on the road. She doesn't have her own house. And she is not affordable because she wants to save 3 rupees. I will not, it is difficult to convert into cents. So then I was like, okay, then why not start a bank? And that's how we went for banking license. When we applied for the banking license, majority of our women had a thumb impression. On that ground, Reserve Bank of India rejected the license, saying that how can we issue a license to the bank whose promoting members are non-literate? I came back from Mumbai, I was nervous. I told women. They were not nervous. They said, so what? We'll learn to read and write and apply again. And we went again. You know, it is just humbling. I had no idea, but next time when we went, I didn't go alone. Women came with me. And we had 15 women. We had a discussion with officer. And they said, you rejected the license because we are non-literate. Tell us to calculate the interest of any principal amount. If we fail, don't issue the license. Tell your officers to do it without calculator. So I would like to say that this was a learning for me. And I realized that was my first financial literacy for me, not for people, because they know very well. And learning was that in spite if people are non-literate, that doesn't mean they cannot manage finance. They can. So that's how Mandeshi Mahila Bank started. Today we have around 310,000 women who are banking with us in 2 states. Of course, bank is in 1 state. In another state we have company. And it's not only just, we have a women who have started a micro enterprise also. So it's saving, pension with the partners, insurance. And I'm glad that Naina is there, which I would talk about it later. But we have some very innovative partnership about how it was just, I just want to say that the whole learning is that we talk of inclusion, we talk of access, but people in villages, rural people, they don't talk access, inclusion. They talk of wealth generation. And that wealth generation is not just money. It has a lot of other values also, which I would come at to later. Thank you.
Ms. Kidbai, your roots are with a large multinational commercial bank. Looking at the financial inclusion space now and looking at all the Jan Dhan bank accounts that have been opened, what is your reckoning? Do you think, is there money to be made by banks in reaching out to the financially excluded? If it does, then it fits the definition of shared value perfectly. But what is your thoughts on that?
So let me start by answering that question in 2 ways. One is, I'm a big supporter of financial inclusion, and people like Chetna showed me the way. I have had the honor and privilege of actually visiting her space in these parts of Maharashtra, where the women there and the way she has embraced them and brought them into the world of money and finance, but even more important, livelihood and livelihood creation are really lessons. I mean, in fact, I'm very lucky that 2 of the people who taught me the way, Rima Nanavati, through whatever little association I've had with Seva, through Grassroots Trading Network, and Rudy and all of that, and Chetna, have been where I learned the importance of inclusion. So I do think it's a very important agenda, and exactly as you said, I think it is fabulous that this country has embraced it right from the top. However, the issue right now is while we choose to serve what is a very important part of India's initiative in this space, it does not make business sense as of now for banks. So, and unfortunately, our banks are not in the peak of health. And the very banks who were forced to do it are the ones that are the weakest. So it is a burden on them, and we have to recognize that. So therefore, I would say it is absolutely critical that we make it work. And the only way it will work now is government has to push its direct benefit transfers through the system. So it's fabulous. Accounts are now opened. Aadhaar card has been fully accepted despite all the issues that it went through, unfortunately for a while. And hats off to this Prime Minister that he didn't throw it out the window. He brought it right back. And using the Aadhaar card, using the direct benefit transfer system where we can put money through those bank accounts, that's where it will begin to work. Because the cost to a bank to maintain an account where there is no money and no transaction is very high. So we have to make this work, and I think we are at that point in our history where a push in the right direction will take us forward. If we don't get this right, we will have to end up closing a lot of these accounts, which would be quite unfortunate. I just want to add here that it isn't just about the banking part of it, the microfinance part of it. And I think I've learned this both with Rima and Seva and with Chetna. In fact, one of the initiatives we supported with Chetna from HSBC was actually and it wasn't, it was, I would call it CSV because it was self-serving, but what it was a donation to get her school, which trained these women in inclusion and also trained them in skills. And it was her idea. So what we were doing was capacity building with a partner who was very important to us at the bank, a partner who we lent to and who on-lent to these women. So you can approach this in both ways, the capacity building you provide, aside from the business relationship which we had in terms of lending. And then let me just, as a last point, also talk about microfinance, which is very, very critical, very close to my heart. But I have seen the boom and bust of microfinance because the business model is about making profit. So what is the right price to charge becomes very important. And we saw how a rapacious rate, you know, however you define it, in our case, as in India's case, it was 45, 50%, caused its own backlash. Yeah. And we had politicians shouting from pulpits, please don't repay the microfinance institutions. And microfinance almost died in this country. I'm really glad it's back. The model that's back is a very robust self-help group model. But the fact is that we have to have a model which is socially relevant, even while it seeks to be a business model.
That's interesting. I have a counter question to that, which I shall come to later in the discussion. Mr. Anil Sinha, formerly with the International Finance Corporation in India, you've done a lot of work on impact investing, and you studied the concept, you practiced it. Do you think impact investing is something that will fit a country like India, which will work, and what are the pitfalls?
Firstly, thank you for inviting me, and it's great to be part of the CSV movement in India. And thank you for saying that I'm former IFC, because the print says I'm still the IFC regional head, which I'm not. I do represent the Global Impact Investors Network, which is a network of 200 financial institutions. The network's main mandate is to push the impact investing agenda globally. The issue often is, what is impact investing? Impact investing, as far as the GIN is concerned, is to make a social and environment impact along with a financial return. The characteristics are that there must be intentionality. Intentionality to make that social and environment impact. That's first, and then looking at the financial returns alongside it. Those financial returns can be simply getting your money back, to making a risk-adjusted return. It could be different assets. But the other characteristic, and this is what's related to shared value, is measuring the impact. And unless you measure the impact and report it, then you're not being able to say that you're an impact investor. And for that, the GIN has got a certain definition, because first thing is for everyone to understand what is meant by input, output, impact, what are the key indicators per sector. So if you wish, there is a global standard promoted called IRIS, and that is being used by most impact investors. But what is the case for impact investing, and therefore what is the business case for CSV? It is, perhaps I can give you an example. The Cambridge Associates in UK did an independent study comparing 51 impact funds versus similar funds that don't have a impact motive. As far as development impact was concerned, clearly there was no comparison, but even as far as financial returns were concerned, the difference was very small. You can have impact with having a reasonable financial return. There isn't a duality. What does it mean for India? A few years ago, when the current Honorable Minister of Finance, Mrs. Jayan Sinha, was in Omidiyar, we got together along with Vineet Rai and set up the India Impact Investors Council. This has got now 35 impact funds, nearly $1.6 billion. There is enough money there for innovative social enterprises. Right now, the big issue is risk capital is still missing, and I think the working capital is still missing. But the mature enterprise can attract equity, that's not a problem. The biggest issue, and I think this is what Swamiji mentioned, and Sadhviji mentioned, Sharmaji really extrapolated, if you want to make impact investing at the base of the pyramid, you need empathy. You need empathy, you need to understand that market. And I'm not just talking 10,000 feet. It's the needs of the stakeholders you need to understand better, and it can't be done out of an office. We've seen it. And the markets and the needs are changing. Earlier you could, if you use water for an example, earlier you could have delivered bulk water, it's clean, it's arsenic free, people will go to that place and take it. Now they want water at a price point, at a delivery point, the market's changed. And you need to understand, and unless you're empathetic, and unless you're assimilating, you won't get the business model right. And secondly is patience. You can't expect the VC returns you get out of the US from investing at the BOP space. But yes, it's still financially profitable, it's worth investing. This movement that I mentioned globally, just the Global Impact Investors Council members are managing more than $60 billion in assets. In India, as I mentioned, $1.6 billion is being managed in assets, and these are just the impact funds. But most of these funds in India are financed by overseas investors. The big change will come in India when we get the main financial institutions involved, as well as high net individuals involved in investing out of their Indian funds. And I think that's the big change that I want to see if impact investing has come down to India. And it can be done. This is the cradle for innovation. And I also represent Millennium Alliance, which is a FICCI-managed competition platform for discovering social enterprises and bringing them to scale. We're expanding this program rapidly, and every year we get nearly 2,000 proposals coming in. And Nanaji started this program, so I'm just mentioning how it's growing tremendously now. So there's a discovery issue. There's so much innovation happening. How can we discover? How can we catalyze? And how can we bring them to scale more quickly? I think I'll just stop there. Thanks.
One of the industries that has been a success story in terms of reforms in India post-1991 has been telecom. You know, we had a revolution there, and a lot of the Prime Minister's initiatives on financial inclusion front today are riding on the platform of the mobile explosion. Now, Rajat Kathuria from ICRIER has had a hand in the telecom revolution when he was working with the TRAI in the early part of last decade. He's done extensive work, extensive study on mobile patterns and pricing and subsidies and all the elements that go into that went into the telecom revolution. Rajat, do you think it's possible to replicate the telecom revolution in microfinance, micro-lending in India?
Well, I've always been an optimist and I remain an eternal optimist, especially if you worked in the mobile industry. Despite all that has happened, India today has 1 billion connections. And kind of to answer the question, Raghu, that you asked, and to take what Nena said, which is absolutely right, which is if we don't get it right now, we're going to be pushed back many, many decades. I mean, we've tried financial inclusion for so many years in India, and the physical bank-led model of financial inclusion, which didn't succeed, as Nena said, the MFI model, unraveled, especially in Andhra Pradesh, and then you had this heap of regulation piled onto them of lending rates. But I think the kind of constellation of stars today, to borrow a phrase that was used in the economic survey of last year, is aligned in our favor, not only for our economy, but I think for financial inclusion as well. And that constellation, I think, as Raghu you refer to, is using technology, using mobile phones, and also kind of easing regulation to allow multiple participants to come into this space. So besides banks, we know physical bank location in rural areas is not worth it. It hasn't worked since independence, it's not going to work now. So we need that kind of technology and mobile push. And there has been, after a considerable amount of time, some amount of, I think, easing of the regulation in allowing business correspondence. And it will happen in steps. RBI is very cautious in terms of liberalizing in this area because of well-known reasons, because you're dealing with, money, and you're dealing with money of people at the bottom of the pyramid. So you have to be doubly careful. So, but there has been easing of regulation in this space. There are payment banks that are going to come in. There are small banks that are going to come in as well. MFIs are trying to kind of reinvent themselves. Post offices have applied to become payments banks. And, 1 billion people have access to, well, if not a billion people, at least 70% of the people in India have access to mobile phones. And so the Jan Dhan, Aadhaar, mobile trinity is the way to go, I think, if one has to achieve financial inclusion. And this has to be made profitable, otherwise it will not succeed. As Nena said, it will just not succeed. So the credit-linked model of financial inclusion, which we've been following since independence, needs to be supplemented, and other products need to be provided on the same platform. So you need not only to give credit, but you need to also look at other products. So there's avenues to make money, and one of the things is your direct benefit transfer going into the bank account. So there is some commission, and it therefore makes it attractive and efficient to run that bank. If they are dormant accounts, as they've been in the past, then it's going to die a natural death. So I think the constellation today, as the architecture, easing of regulations, the availability of technology, the availability of, or I think the possibility of experimenting with newer products like insurance on the same platform, giving direct benefit transfers, makes a case that it's possible that this venture, I mean, of course there will be failures, that this might succeed, but I don't think there's any other way that we've tried a lot of other ways. I think this is one way where it can work. And the other point that I would wish to make in this space is that, what do they use this, so the kind of impact assessment from the point of view of the people who borrow small amounts of money, what are they using the money for? I think that also, alongside the impact assessment that Mr. Sinha talked, what are they using the money for? Are they using it to create assets? Are they using for consumption smoothing? Are they using it for just shadis or spending on wedding? And that's also important. And there should be some kind of training or literacy, as Rahul also talked about, Mr. Gangwal also talked about, in terms of educating on the usage of these small loans, because repayment of these loans is much higher than repayment of the big bank account. So impacts of what they're using the money for and the financial architecture, I think both these combined make for a good beginning. Of course, the proof of the pudding is in the eating. We'll know what the status of financial inclusion is in a few years from now. But I think there are reasons to be optimistic.
If I can just jump in here, there's one element of what Rajat has said which maybe we haven't touched on, and that is in putting this scheme into place in Rajasthan, the money goes to the head of the household, who is the woman. And that is, I think, where we have scored in microfinance, also where self-help groups are at the base. and where if we can put the DBT schemes in a way that actually acknowledge the role of the woman as the caretaker of the family, it will help both in terms of the way the money is spent, but also the importance it might place on her in the community.
I'll come back to you. Rahul, you heard Ms. Kidwai making the point that these financial institution accounts are not necessarily money-making, they are more a loss-making proposition. On the other hand, you have the contrast where you have people borrowing at rates, I'm talking of the small neighborhood fruit seller, flower seller, vendor, borrowing at atrocious rates of over 100% per annum. Now, how do you solve this issue where you get more finance into the hands of these marginalized, excluded borrowers without having the hassles of going through KYC and all kinds of other issues, and at the same time ensuring that the lender makes money?
And the answer to that lies in combination of factors which we talked about. It lies in literacy, technology, and structures. Structures to bring multiple things together. Just carrying forward a point that was made by Rajat. We were doing an assessment. We found out that the average distance for a household in parts of UP and Bihar to a post office is approximately 2 kilometers. To a representative of financial intermediary, it is 1.5 times at 3 kilometers. To an ATM, it becomes approximately 8 kilometers. To a financial intermediary, it becomes 20 kilometers. To a bank, it becomes 30 kilometers. So financial inclusion has to weave in all aspects, whether it's the intermediary, whether it's the bank, whether it's the post office. And one great way of doing that is technology. It has to also address issues which were traditionally holding back a lot of lending to individuals, which were issues of ranging from identification to access to minimum balance to opening hours. And I think all of them are getting addressed through this triad of technology, structure, and literacy, which is being talked about. That, I think, is the way forward when you have to address small and medium enterprises or micro enterprises which need microfinance and be able to service their needs.
Ms. Chetna, we were talking about the importance of financial literacy also being imparted to the excluded. I understand that you do a lot of financial literacy programs with support from HSBC Bank and others. Now, what has been an experience in that, and has it really helped improve financial inclusion amongst the marginalized?
So I would just like, before coming to that, also just add what you are saying. It's very interesting. As you mentioned that rural banks, brick and mortar banks were never working. The reason is very simple, that when we started bank, the next day women did not come to the bank. And the reason they said that we cannot afford to come because we will lose a working day. So then we decided if women cannot come to the bank, simple solution, go to them. That's it. And that's how we started doorstep banking. Again, I would like to say that why women go to money lender when banks are there around. The women say very clearly, when we go to money lender, when we go to bank gives paper. When we go to money lender, they give us money. And they say, we know that we are paying high interest. It's not that they don't know. So these are the things which I think banking sector has come forward to now learn it. So these are the issues which are, I feel that women know the solutions, make it simple, they will do it. Second thing which you are talking about, the financial literacy and how it works. And as you mentioned that the repayments are high because bank comes to their door. I would like to say that one woman came to bank and she said that I want to buy 2 cell phones. I was, why 2 cell phones? She said 1 cell phone for, I am sheep and goat rearer. I migrate for 5 months and I leave my children with my mother-in-law. So I want to have 1 cell phone for me and I'll leave another cell phone with my family so that I can be in touch with my family. So then I saw that she knows exactly what she wants. And then above all, she's saying, why don't you start a training where we don't know how to operate cell phone. Why don't you do that? Why don't you train us? So that's how what Naina said, livelihood training, that's how we started a business school for rural women. I particularly want to say that, business school for rural women, because these are Deshi MBAs. And with the support of HSBC, we started in 2007. Now it's like around so many years. And now our women are getting micro ATM at their doorstep and using these RuPay card, which has both, which has, we do the DBTs also, the direct benefit transfers also. But when I say that, there is lot of cost backhand, where you don't have power for nearly 12 hours, you need these huge batteries. In remote areas, there are issues of internet connections, where you have to have a standby, not only one, you have to have a standby satellite. So these issues are there which you have to delete, and a bank like Mandeshi is doing it on its own. And I just want to say that there is no grant or subsidy for these things. We are getting support from an institution like HSBC. They came with Accenture also. So this is the share value, where you create a value, when invest and create a value, and then wealth is going to generate. So these are the challenges which you face. And regarding financial literacy, I would say, like, 7 years before, our women were saying that we don't know how to operate the cell phone. Now they are saying that, try to find out the solutions without number. In our financial literacy, when we swipe the card, they say that we don't want number, because then we have to tell the BC that, okay, put that point, enter that number. So it's not only just designing financial literacy, but it is listening to them, what exactly they are saying. They are very smart. And if we listen to them and then design, they will generate a value a lot. So I think that women, banking sector, we have not been able to reach that aggressively. The reason because we are not listening to the client. I would just make another point. Second part of Janadhan Yojana is to provide a overdraft facility to the client. Now my question would be, accounts have been opened, people have deposited money, so all that part from that side has been done. How much has been overdraft facility been done by the banks? That would be my question. And I think that is very important. And I would say that we have actually, Mandeshi has done this overdraft facility by providing doorstep micro ATM banking. And our impact assessment of that whole product was done by GIZ. And it was so surprising. Women who took a loan for 10,000 rupees, her working capital went to more than 50,000 rupees. So it's not, they know how to do banking. It's matter of us to understand what type of banking we will have to learn and provide them. Thank you.
If I may add to that, just the other day I read somewhere that the total overdraft provided under all the 200 million Jan-Dhan accounts adds up to about 900 crores as of now. That's very small compared to the 26,000 crores that's been deposited in these accounts. But Ms. Kidwai, on the same subject, you have this dichotomy where a borrower comes to you and he or she is asked for KYC, for collateral, and all kinds of things, even to get the 50,000 rupees overdraft that Ms. Chetna was talking about. Whereas on the other hand, commercial banks are merely lending to business tycoons who have defaulted on loan obligations in the past, who don't think twice about not paying their installments and then go in for debt restructuring that runs into thousands of crores. Now, a commercial bank, a successful commercial bank, is very happy lending to these tycoons, even when they know the risks involved. Whereas a small borrower who comes to you for 50,000 rupees, probably for running a small business and has the collateral and is able to satisfy the KYC. Now, so you're not willing to lend to them. Why this dichotomy?
Well, I would like to believe that the banks, when they lent the money to these big business tycoons, believed that the money would come back. Because if they didn't, it would only smell of corruption, which we, of course, would be quite disgraceful if that was what happened. So measurement of risk is what banks look at and do. And when they don't understand risk, they don't lend. So the models for lending into this microfinance space were not understood by the banks. So, but having said that, many banks lent to microfinance institutions because they didn't know themselves how they could make it work. So, and that lending often happened at, very attractive rates to the microfinance institutions. And it's not a bad model. That if you can't do it yourself, and I mean, banks like HSBC are just 50 branches in the whole country. We're not even there where the microfinance is required. But what better than to lend through the Chetna Galas of the world and the Rima Nanavatis of the world who know how to do it. And they are anchored in that society and they get the model right. So what we need is a multitude of such institutions that exist, that know the business. Their business model is to get it right and support them. And I am the last person to say the banks are the only ones that should go in there. They'll mess it up. We cannot have branch managers sitting in their offices trying to do this microfinance. We've done it before. We have given agricultural loans and we've only lived to waive them. And what that does is cause a whole bunch of what we call moral turpitude, which means the next person who borrows is borrowing knowing he doesn't have to repay. Yeah. And that cannot be a banking system. But a system which lends anchored in the community as the self-help group does, where one member of the self-help group more or less guarantees the other, it works because then the intent to repay is real. So I think it's really all about the business model and getting it right. And I think at heart, people are not bad, but we create bad systems and encourage wrong behavior.
Thank you. Mr. David Wilcox, can we have a mic moved to Mr. David? Yeah. Ms. Chetna has to leave, so I hope your question is not for...
Well, my comment is for Chetna because Chetna's here because I was meeting with the vice chair of MasterCard. And the vice chair of MasterCard, I told him about the conference, and he said, you have to have Chetna come. So I just want to point out that despite all of the things I said in my panel about how people aren't talking amongst themselves, in this particular case, we have a great example of MasterCard talking with Chetna and recognizing that she needed to be here at this panel. And if you'd like to go, Chetna, you may want to listen to this question, but this is a question which is really a question of mark. And it's a question which I think the Shared Value Initiative should ask, which is, what's the most significant things that the Shared Value Initiative could do to change the limited resources that are available? And you have to understand the context here. The $60 billion that you just mentioned is the largest marketing failure in the history of the world. Because $8 trillion, and it's hard to even comprehend that number, but $8 trillion raised their hands 20 years ago and said, we want our money to have impact. 20 years ago, $8 trillion worth of money said, we want our money to have impact. And they got nothing but negative screens for 15 years. They got social responsible investment because, and I'm going to be really blunt here, that was the only innovation that increased the power of the financial services industry. All other impact innovations would have required the financial services industry to bring in other partners and admit they didn't understand how to do this. And so they didn't do anything for 10 years. They did SRI in 5 years, they did nothing for 10 years. And then the screams became so outrageously loud that they adopted impact investing. So that $60 billion is less than 1% of the $8 trillion that asked 20 years ago to have impact. The largest marketing failure in the history of the world, because these people are known to the industry. They talk to them all the time. They could have decided to put in place, change the regulations in the United States. The regulation you need to change is called an ERISA requirement. And it can be changed tomorrow. It just has to be rewritten to allow some small percentage of the pension fund money to consider impact. It could have changed 20 years ago, or 19 years ago, or 18 years ago, or 17 years ago. It's not changing. The people who lobby against changing that run the impact investing groups.
Mr. Sinha, you want to respond to that quickly?
Yeah,
our time is up.
Yeah, the figure is close to 11 billion. But the issue is, let's go forward. There's no point saying what happened 20 years ago, this could have happened. It's all very well. The issue is now people are committed. There's a big slogan, what use is your money if it doesn't do good? There's a big slogan now, but how do you translate that into actually investing for impact? What are the models that work, what don't work? And I think there's a big lesson about what doesn't work. I think that's what the movement is trying to do, and I think I fully agree with you. Like
if the shared value initiative wants to have the biggest impact in the world, they would get the CEOs of each of the member companies to write a letter to the ERISA guideline managers saying, we as companies want the ERISA guidelines changed. We'd like to be able to deploy our assets into integrated impact and investments. And that would be the fastest way to have the biggest impact in the world that could ever be done across all shared value activities.
My opinion is it's not either or. And for you to say this is the only thing that can change it and that's the only thing will happen, they should all write to all the CEOs and all CEOs will stand up and say, yeah, I'm sorry, that's your opinion, that's one opinion, and that's one way. But there's also has to be a ground-up movement to show it can be done, and I think that's what's more important than, and I'm not saying that you're wrong, but I'm saying both can coexist.
Thank you.
I'd just like to share one model.
I have to close here. The debate is interesting,
okay.
but...
No, I'll just say that anytime you want to know about social impact bonds, the next phase of using finance for development, social impact bonds, interesting. There's only one model in India, which is not a social impact bond, which is Educate Girls, which in Rajasthan, one of our Millennium Alliance companies, which combines stakeholders and the people and the government, performance by NGOs or social enterprises for impact, and financiers into one bond to achieve achievable results. I could go into further details, but I just want to leave that thought in your mind.
Maybe we should have a separate session for just the two gentlemen.
Sure. And next time
Thank you so much. It's very interesting listening to the debate.
So can I request Neera to give the special gift from Leela?